Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Friday, December the 17th, 2010. Okay, before we get started today, I want to take a moment to apologize to everybody for my bad market call on the Dow Jones Industrial, well, U.S. markets, everybody basically. For the past couple of months, not counting the last couple of weeks, the last 3 weeks, I think I've been trading from the long side. But prior to this sell-off we had here, I was absolutely against this run up here. I was against it here. I mean, just consistently against the market, and I made my case very effectively. And I was, a lot of people said I was overly confident. Maybe that's true. My reasoning was sound in my own opinion, but it didn't give enough weight to the effects of the Fed I expected, and I was betting on the Europe credit crisis to evolve and collapse before now, much sooner than later, and it didn't happen. So I ended up getting owned in that absolute bad call there. So that's my own fault. It's nothing I can, no one else to blame for that but me. There's been a lot of different opinions out there as to why I made the mistake, and lots of different things out there that maybe they're true. I don't really know. The main thing for me is I look at it and I say, what happened? First off, the first mistake that I made was this here and this here was a trend line to the upside. We agreed with that. We saw that, and we said it didn't matter. Let it bounce, and we'd short it anyway. So we let it bounce, and then we just started shorting, and we just kept shorting and kept shorting. We didn't care. Again, it blew up in our faces. It was absolutely the wrong thing to do. So to make sure we don't do that again from now on, that's what we've been doing for the past few weeks and talking about, we're looking at short-term trends. We're not looking at all the fundamentals out there as being the thing to bet on, and we're just going to keep using the trends. As long as the trends are up, we're still going to use them as buying opportunities. When the trends break down, then we will actually consider a short. But otherwise, you got to respect the trend. I learned my lesson. It's sorry that it hurt other people. It wasn't intended to do that. My objective here is to provide a technical analysis opinion, and though some people have taken this opportunity to absolutely go off on us, in reality, in 8 months, I've been wrong one time. Okay, so it was a painful time, granted, but it's the analysis is still effective. It's just happened to be uh, controlled by a human who made a mistake. So I'm sorry about that, and I'll do better. Okay. You guys will notice that lately there's been a lot of overbought signals here and there, and I have been absolutely refusing to short them. Some people have argued that I'm gun shy, which may be the case, but in any event, I've just kind of changed my strategy a bit. Instead of trying to call the peak before it happens, I'm going to sit there and wait for the selling to start before I actually turn around and say, now we will short. Let me show you. I put out a video today. Go there right quick and get this out of the way. We put a video on our website at perfectstockalert.com over here in the trading methods. We've got another video that came out today, and it shows how we're doing that. You can see that we're looking at the 1-year weekly chart, looking at the reversal points, and that's how you can understand this. This video here is about 7 minutes long. It's a really good tutorial there to show you how to trade the trend, and also what indicators we'll be watching for that reversal points. That's really important. Last night we came out with, let me move this over so you can see it. Last night we came out with the Stocks That Double report. It's like a 45-minute video series that goes into the analysis of those opportunities. And then this weekend, Perfect Stock Alerts will come out with their first Stock That Double alert. It's basically an alert with a stop and so forth and so on, showing the stock that we expect to double in share price. Okay, in the short term. I would like to thank those members in our message forum today who took the time to post to me candidly on the message forum there, discussing their opinion of my market calls and our website. I appreciate that. It's not always pleasant, but it's helpful. We just take some time and we'll keep working at it. We'll get better and better. Okay, that's the whole point. Now let's get on with today's market analysis. Okay, let's start off with the Dow Jones Industrial Average. She was down slightly today, nothing major. Overall, U.S. markets were absolutely flat, but there's something you need to note. First off, the candlestick formation on the Dow Jones Industrial Average is basically just indecision. It's not going anywhere, but this is the previous resistance, and that's acting as support now, and that's why it's not going anywhere. It's just consolidating. But today's activity on the VIX suggests that there's a bigger move to the upside coming in this market, and I want to show that to you. Before I do that, I also need to point out there is a great deal of support still. You got this upper trend line still trending higher, so you can still be a bull here. You've also got this support, the 50-day moving average support, and the middle Bollinger Band line is going to act as support as well as this. So you've got you're going to have to come up with some major bad news to drive through this market. Without that major bad news, and the Fed's still pumping money into the market, you're going to go higher. Okay, a quick look here at the NASDAQ. This particular index was strong all day, even though it didn't go anywhere. It still trades above the upper trend line, so you're still in a bullish trend here. And the main thing I want to draw your attention to is that volume right there. This is a lot of strength here, and I expect this was not actually churning and a sell-off. I expect the same thing I was pointing out on the Dow Jones, and that's this. This was the resistance line. It's now acting as support. You've also got this middle Bollinger Band line is acting as support, as well as this 50 period moving average. You got a lot of support lines here. She's got plenty of room to make a lot of strength here to make a move to the upside here. And if you look at the VIX, you're going to see why. Okay, here we have the S&P 500, same basic conditions of the overall markets as your uptrend line. Can't really draw today. You've got this resistance acting as support. You've also got this support, and the 50 days moving average, lots of support and lots of good volume coming into it, not going out. Okay, this is a signal that you're going to go higher here. Okay, TSX, Canada's markets. Nice volume here, coming in for a while now. This is still in the uptrend, still an opportunity to be a buyer here, and it looks like a good one. All right, this is the VIX, and we said before, and we say it again, the VIX, it runs the opposite of the overall market. So if you want to confirm your analysis or find divergences, things that shouldn't be there that are or whatnot, you can analyze it against the VIX, knowing that the VIX runs the opposite of the overall markets. So if you see a bullish situation on the overall markets, you should see a bearish one on the VIX, and vice versa. But if you look at today's candlestick from the Dow Jones, the S&P, the FTSE, the TSX, any of them, they all looked very flat, didn't go anywhere, and yet the VIX took a major nosedive today. Candlestick formation's very bearish and much larger than the previous one. Sorry, much larger than the previous one, showing selling is increasing here. So you should have seen a bigger move by the overall markets here than we saw. So my reasoning as to why you didn't is simply that the overall markets are hesitate against the weekend. So as soon as the weekend's over, they'll take off again. And that's what's going on there. You also notice the histogram increasing to the downside here. You started to turn around here, and then boom, taking off again. Also notice the MACD moving averages diverging here. All right, you're going to see a bigger move to the downside here in the VIX, and that will translate to a bigger move in the overall U.S. market. So it makes sense to me to see more move to the upside next week. And of course, that assumes nothing major blows up over there in Europe or something like that. Okay, one more item to bring to your attention would be silver. Yesterday, gold broke down through the upper trend line, but silver did not. And silver is a very, very bullish chart here. We've talked about this before. This is one of those conditions that you really got to love. And you've got a nice consolidation period here, breakout, and this is a very strong rally. I do not expect to see a lot of selling here, and if you did, it'd be a heck of a buying opportunity. Right now, as long as she's trading above this upper trend line, you're going to still respect that and be a buyer here. You could buy at this close of 29.12 with a stop just below the trend line and be relatively safe there with lots of upside potential still in play. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. A quick look at our disclaimer. The disclaimer, read it and weep. God bless, take care, and I will see you in the next video. Enjoy your weekend and be safe.